All right, this is Nick with Lines and Market Solutions. As promised, coming out with my Sunday video on the earnings that we have for this upcoming week. I'm not going to go over every single earnings report that we're going to see. I'm going to focus on just one per day, Monday through Friday, the ones that I like the most. I'm going to give you a quick rundown of what the analysts are expecting, so the earnings per share and the expected revenue. And then I'll try to break down how they performed in quarter 3, 2, and 1 of last year, so you have an idea of what to expect coming in to this week's earnings. Let's just jump right into it. So let's get into our first stock. We have Whirlpool. Whirlpool right now is trading at, it looks like 149.42 is where it closed on Friday. That's off its year high of 163.64. Whirlpool has an EPS of $4.27 and an expected revenue of $5.52 billion. In quarter 3 last year, Whirlpool split, beating the earnings per share but missing revenue. In quarter 2, Whirlpool beat both revenue and earnings per share. And then in quarter 1, they beat earnings per share, but they lost on the revenue. I like Whirlpool. It's off its high. Let's jump into a couple of things that I've never talked about yet, and that's really the technical analysis. So how I have my graph set up. I have my candlestick chart here. I have a simple moving average, which is this one here that kind of follows it. It's a little lagged, so it doesn't move as fast as the stock. It kind of this gives you like a slower movement to show like maybe where it's gonna go. And then you have your exponential moving average here, which kind of follows it directly a little bit quicker. It follows the turns of the stock a little faster. In the middle here, I have my RSI. RSI is, in simple terms, it just measures if the stock is overbought or if it's oversold. As you can see here, it crossed into this red line. It crossed past this one into the red area, meaning that it was overbought. So in this area here, the graph said that it was overbought, and what do you know? It took a dive down. People saw that it was overbought. It's just an indicator to let you know it's overbought, and maybe you should get out. Don't rely on just one indicator. You have to rely on many different things. So all these tools that I have set up are just different levels of confirmations that I have. But as you can see here, around the time that it was overbought, this is my MACD indicator. MACD measures momentum to the upside, momentum to the downside. So at this time, the MACD indicator was starting to signal momentum change to the downside. So MACD was saying momentum was going down. The RSI said that it was overbought. So those are two confirmations, maybe a good time to get out. And in this case, it did pay off, and the stock did come down. So you would have made off the profit without having to suffer any of those losses. But let's bring that knowledge of my RSI and MACD into the earnings. So we're looking at earnings right now. RSI right in the middle. So it's not overbought and it's not oversold. It's pretty much valued about right where it should be according to this yearly graph. And on the MACD, our momentum indicator, it's starting to curve to the downside coming into this week's earnings. Using technical analysis for earnings is a little trickier because it doesn't play the same. It's not going to follow a trend anymore. Whatever that earnings says, it's going to completely wipe out the trend that it's on now. If it has a support, this one doesn't. This is just going to be an example. If we were going to say that the support of Whirlpool was 144, and they gave, for instance, if they gave a horrendous, just an absolute terrible earnings per share, they gave a terrible revenue, and their outlook was absolutely terrible, that does not mean that 144 is any longer going to be its support. This stock can, with a bad earnings, can drop below that support, and it can find a new support down here and a new resistance here. So using technical analysis for earnings is a little bit trickier. You definitely have to get a little bit more in depth with the company and do some financial background checking. You have to find out what the company's outlook looks like, and then you really got to figure out what you see in the earnings and the revenue, or at least check with other analysts and see what they're expecting, and maybe compare analysts and find a happy medium, something in the middle, to help you play these earnings. But we'll jump into Tuesday's trade. Tuesday's a little more popular stock, definitely one that I've made money on in the past. And we're gonna call this one it's Apple. So it's at 318.31 as of Friday's close, just off its high, its all-time high of $323.33. And Apple has more than doubled this year. You can see here at the beginning, it was a low of 153.66, and it's been on just a huge jump here this entire year, more than doubling. At first, analysts were saying that the iPhone sales were going to be a little bit sketchy. They didn't believe that they were going to be as in high demand. People were going to hold on to their old iPhones longer. But it turns out that I mean, I guess they were wrong, because this holiday season, 2019's holiday season, the iPhone 11 lineup made up for 69% of the phone sales, compared to 65% of just last year. So it's actually doing better this year. Apple is going to be expecting 4.9% year-over-year revenue growth to 88.43 billion. So their expected revenue is 88.43 billion, and that's going to be fueling an 8.6% earnings growth to $4.54. So they're expecting $4.54 per share. Now, Apple is a monster. Apple has beaten revenue and earnings per share in every quarter coming into this one. Every quarter, I will say quarter one, quarter two, and quarter three of last year, it beat every single quarter. So we're coming into quarter four this year. That would be the end of up to December 31st. We're measuring into. I would not be surprised if Apple did it again. I like to trade momentum. I don't want to break the pattern. It's on a streak right now, so I would follow that streak. But it's scary, because Apple is on this tremendous rise right now. Apple's been on such a huge streak that if anything doesn't sound absolutely perfect, investors are really scary people, and I think they'll find any reason to jump off this huge high that we're experiencing here, and that the stock can come down. So it is scary trading a red hot stock like this. I don't want to say it's overvalued, because it's Apple, and you never know with companies like Apple and Microsoft if it's overvalued. I mean, they continue to grow and evolve and do well. So I don't want to say it's overvalued, but investors are very scared people, and if earnings or revenue don't come out to be exactly what they want or better, you could get a minor sell-off. I think it would recover right away. But if you do buy this stock before earnings, just be prepared that if it's not what investors are expecting to the T, you might get a minor drop. And then in my eyes, that would just be a buying opportunity, because Apple's not going anywhere. It's coming right back. In my eyes, that's what it's going to do if it happens, if it does get a sell-off. But if you want to like just check last earnings with Apple, on October 30th, the stock closed the day at $243. Earnings came out. It beat both revenue and it beat the earnings per share. And then the stock then proceeded to rise $15 over the next 3 days. So if it does do the same, I would expect a rise. I don't see Apple slowing down any. But always do your own homework. Don't take anybody's word for it. Like Jim Cramer said, tips are for waiters. We just have to learn, and then we can talk, and then you have to, at the end of the day, make your own decision on what you're going to do. I like Apple, but like I said, things right now are red hot, so it's a little more dangerous coming into it. You have to really nail it now, because things are getting overvalued, or they're getting up in value. I don't want to say overvalued, but they're up in value. Wednesday, we have my favorite CEO of all time giving his earnings. That's Elon Musk's company, Tesla. Tesla is on a historic rise right now. It's up, what, 125% in 3 months, 125% growth in 3 months. In this year alone, we're only 26 days into this year, and it's up 37% in 26 days. So this is on an astronomical rise. It's got so much momentum behind it. People are really hot on this stock. People really like Elon Musk in general, and everything that he's touching right now just seems to be gold. Um, Tesla is trading at 564.82, just about $20 or $30 off its all-time high of 594.50. Um, Analysts are expecting a 2.9% revenue decline to 7.02 billion and a 10.9% dip in profits to $1.72 per share. Um, so you know, California took away, or not California took away, but fourth quarter sales or new registrations for Tesla were cut nearly in half in California. And a lot of this is expected to be by the tax credit that was taken away from Tesla buyers. You used to get like a money return or like a discount for buying electric vehicles. Tesla passed the amount of sales and that tax credit was taken away. Now people aren't getting their money back or their discounts for buying these Teslas anymore. And that could be a reason why the fourth quarter sales for Tesla were nearly cut in half in California, and another reason why analysts are expecting a decrease in revenue and earnings per share. With that being said, I don't. The future outlook has to be bright for Tesla. Tesla just got done building their China plant. They just broke ground on their European plant, so production is just growing. Demand is growing. With production, with these plants in China and Europe, I would expect that it would be cheaper to build these cars. It would be a lot easier to fill the orders for these cars, which means that they're going to be. I would expect revenue growth. So I would expect a bright future outlook of the company. I don't know what they're going to report this earnings, but I would expect that when they do report, that they'll have some great news on future outlook. Um, this is one that is really scary to get into though, because like I said, the revenue and the earnings might be down, but I think future outlook would be good. I would wait. I'm personally waiting until after earnings to buy into this stock because I'm not sure what investors are going to do, how they're going to react. The company is up so much right now, like Apple, that I feel like any bad news will scare off these investors, and there could be a dip if there is that's a big if there is bad news reported on Thursday. But we can jump into our next one here. So we'll go into our, this was Wednesday, so we'll go into Tesla's Wednesday. We're going to go into Thursday, which is Amazon. So we have Amazon reporting their earnings on Thursday, and Amazon is trading at $1,861.64, and that is off its high of $2,035.80 from July 11th. You can see July 11th here, and it's down to where we are now, which is here. I like Amazon's graph. Amazon follows like a pretty good wave pattern that you have here, up and down like a typical stock, and then breaking through resistances and creating new resistance and supports. It's ascending triangle pattern. It was expected to go up. They showed us our green of where they expected it to go with our app here, our TD Ameritrade app, and it hit just where it was expected to go before coming down. But if you did buy because you saw this, you would have brought it up. And then you would have saw that after you wrote it up that it was oversold, that momentum was going down, and you would have sold, which means that you would have not had to worry about losing your money when it came back down this way. Now, Amazon Music has surpassed 55 million customers, which is strengthening its fight with iPhone Music, or Apple Music, sorry, and Spotify. But Amazon's web service cloud business lost out on a substantial national defense contract that was instead awarded to Microsoft. They are fighting this right now to try to get that contract, But as of right now, it was awarded to Microsoft, which is a huge loss for Amazon. Even still, 35 of 36 analysts maintain a buy rating, with Morgan Stanley raising the price target to 2,200. And analysts are expecting an 18.7% year-over-year jump in sales to 85.9 billion, but a 33.1% decline in profit to $4.04 per share. In the last 3 quarters, Amazon has split. They missed earnings per share but beat revenue in quarters 3 and 2. And then they beat earnings per share but missed revenue in quarter 1. Amazon's a scary one because it is such a high value company. I mean, if you're going to buy shares of Amazon, you're looking at $1,900 per share. The options aren't much cheaper for Amazon. And also, it's a really complicated company to study because they have their Amazon, Amazon Prime, and they do their sales on the internet. There's Amazon Music. They have Whole Foods now, and then they have this cloud defense contract. There's just so many turning parts with Amazon that it's honestly it's like above my head of studying right now because it just takes too long. It's not worth the effort for me to study this deep into a company when there's so many more. But it's definitely worth a look if you really want to put in that time and effort because Amazon does have large swings, daily swings here. Friday it dropped $23, so it has large daily swings. So tons of potential here to make a lot of money if you're on the right side of the trade. Just make sure, like with any stock, you do your homework, and obviously it's earnings season, so do your financial homework as well. Don't rely just on the technical analysis or the chart analysis, which we could take a quick look at here. The RSI, it's coming down. It's right around where it should be valued, but it's on a steep downtrend in this RSI going towards the oversold area. Also, the momentum indicator going to the downside. So the momentum is shifting down, or it's already shifted, and it's still in that downward motion there. The last stock I want to look at for this week for earnings that I'm going to focus on is Caterpillar, CAT. So we're going to pull up Caterpillar. Caterpillar is trading at $140.38, just about $10 off its high from December 31st. Caterpillar is Caterpillar has it has its year low at 111.75 here. Had a nice bump, and besides this little dip here, it's been on a pretty nice uptrend. So I do like Caterpillar. The RSI indicator has it here. It's looking like it's about to be oversold, although the momentum is shifted to the downside. Coming into earnings, I wouldn't be surprised to see this momentum indicator start to curve back up as people become interested, and I wouldn't be surprised if this thing curved up and it started to trend up before going oversold, because people will become interested in Caterpillar, I believe, being that it's $10 off its high. Also, if you look here, Caterpillar looks to have a support at about $139. You can see it's hit that a couple times. 1, 2, 3. Once you hit 3, you can consider it a pattern or a strong support. So it's right near support, just $1 higher than its support level, which I like. But like I said, when you come into earnings, if it's bad news, this support won't matter anymore. It could drop through it. It could be the catalyst that it needs to break through that support and drop and find a new support somewhere lower if the news is bad. CAT is expecting, or it has an EPS of $2.38 with an expected revenue of $13.43 billion. Caterpillar missed both earnings per share and revenue in quarter 3 and quarter 2 last year, but beat both earnings per share and revenue in quarter 1. So there you have it. Those are the 5 stocks that I like for this week to dig deeper into and do homework on and possibly make a trade before or after their earnings call. This has been Nick with Lions Den Market Solution. As always, if you liked the video and you haven't done so already, please subscribe to the YouTube channel. I'm also very interested in knowing how your trades went. So please comment on the Facebook page. Let me know how your trades went, how you made out. Feel free to join, or please do join the Facebook page and the Facebook group where you can talk to other traders, including myself, about any trades that you've made or any questions you may have or ideas that you have. We're always interested in trading ideas and becoming more savvy investors. But until next Sunday, when I drop the next earnings video,